Hello and welcome to the NetPicks channel. My name is Eric and today we're going to be discussing the trade we put on yesterday in the XLE, the energy sector ETF, and why we decided to take that trade. As you can see here from this 4-hour chart that we're looking at, coming into Friday of last week, we could see the XLE was pulling back but had created somewhat of a floor here around the 57 level and closed here at about 57.5 on Friday. And then over the weekend, with escalations in the Strait of Hormuz and oil rising, the energy stocks also began to move up. And when Monday came around, we could see the open and price move up rather rapidly from there. So seeing this, once we breached the 58 level and continued to move higher and then breached 58.8, which is here, we decided that it would be prudent to put on a spread, a debit spread. And in so doing, we chose the 21st of August expiration date and purchased the 59.50 call, as you can see here, and sold the 60.5 call. Now, we got into this trade for $39, and the most that we could make was obviously the difference of what we paid and the dollar, which is what the spread was doing, or how wide it was. And as you can tell, it's moved up substantially since then. It closed at about 60.20 cents on Friday, or on Monday, excuse me. Today is Tuesday, and we're seeing price action here that have moved higher. But we decided to exit this trade at about 48 cents to 50 cents. And so on this particular trade, we achieved about a 27% return or so just by holding it for the day, and watch price continually as it broke this 58.80 level. Watch price continue to move up, as I said, up to about the 60.2 level. And just that slight move, which was really only maybe about $1 from when we entered to when we exited, we recognized a 27% return on our investment, and that was inside of 24 hours. Now, because these were dated the 21st of August, and today is only the 12th, we could have actually held on to these and watched the upside play out if we wanted to hold it overnight and expected it to move higher. We weren't sure what was going to happen, so we decided to take the gains and look for another opportunity. These types of spreads are fixed, so we know exactly what our loss is and what our gain is, the max on the upside. And so being a strategy that you can get into for relatively low premium relative to just buying straight calls or straight puts, it makes for a great day to 3-day trade in which we can see a substantial return on our capital. And that's why we put this trade on, and that's why we use debit spreads. If you're interested in learning this strategy or any others related to options, you can give us click on the link below or give us a call. We'd be glad to help you learn how to apply these strategies in your trading account so that you can mitigate volatility and also control your risk in any particular trade using very little amounts of capital to achieve a decent return. Thanks.